You're watching the Fox 5 Morning News at 6.
All right, as the tax plan becomes closer to being passed, the stocks are going up.
Joining us now with more, financial advisor Laurie Itkin. Laurie, good morning.
Good morning.
Okay.
First of all, I just want to say my heart goes out to the folks in Ventura County with the fires, but good morning.
Yeah, same with all of us here. Let's talk about this tax reform. Is it a positive push for stocks? Obviously, we've seen a lot of people complaining about what it's going to do, but obviously investors are happy.
Look, the tax reform legislation is great for the stock market, but it's terrible for Californians. I mean, what's going to happen is that people are counting that corporations will get a huge tax cut from 35% to 20% in terms of the taxes they pay, while we in California, millions of households here, itemize their state taxes, which means we will no longer be able to do so, and that translates into hundreds, if not thousands of dollars more in tax that Californians are paying.
And we're saying that corporations would receive a tax reduction, right, from 35 to 20%.
That's right.
So do you believe this will be passed into workers' wages? Should people expect a raise?
Look, what's happening is that the stock market is going up. It has been going up all year in anticipation that this tax legislation would pass. And so investors, obviously, if you want to invest in a profitable company, you're going to want to invest even more in a more profitable company. The question that you ask is whether or not companies are going to share these profits with workers. I doubt it. I do not think that there's going to be any pressure to raise wages. So corporations are going to get the tax cut, which is great for shareholders in these companies, but not good for employees.
Yeah, obviously, we were talking earlier last week about the fact that this tax reform plan is really a difference in philosophies about how to use money, how to spend money. What if for some reason the House and the Senate, they can't come to an agreement on a final bill? Where would that put us?
Boy, well, I think I think it's a very low probability that something won't pass. But boy, if tax reform doesn't pass, and the prices in stocks this has been baked in that it's going to pass, I bet there'll be a correction. We could see stocks falling 5, 10, 15, even 20% if tax reform does not pass.
And right now, since we're talking about stocks, which ones are doing really well right now?
Well, we've seen this whole year, tech stocks have done really well. In particular, 5 names have really carried up the overall market. That's Facebook, Amazon, Apple, Netflix, and Google. They call it the FANG stocks. But we've seen recently, in recent days, that these tech stocks are going down a little bit and more money is being put into other sectors like retail, like banking. And the thought is, who will these tax cuts to the corporations, which companies will benefit the most? And there's a thought that companies that have mostly domestic operations and revenue will feel the most from these tax cuts. They'll benefit more than tech companies that have a lot of overseas operations. So we're seeing a sector rotation right now.
Okay, what should investors and retirement savers and 401k people, and what do we do? Do we just sit tight?
If you have a long-term horizon and you want to be in stocks for the long run, stay in stocks. But as I always say, I don't care what's going on in the market. Any money that you'll need to access in cash to pay mortgage, to pay college, to pay anything major in the next 2 years, that should not be invested in the stock market. Stocks are risky. They have a huge upside potential, but they can also have volatility in the short term. So any cash you need in the next 2 years, keep it safe, but anything that you want to grow long term, keep it in stocks.
And we saw that volatility last week when you had that news report that turned out to be false, and the stock market took a 350-point tumble before its recovery. It's an emotional thing for sure. Laurie Itkin, we thank you as always for your expertise.
Thank you.